Okay, hello and welcome to this price ladder analysis video. We're going to be going through module 8 of the price ladder training course. So far you guys have gone through um, with me a lot of the structure and what we're actually looking at, how we're going to approach these data points, how we can potentially trade them. And so what we're going to be going through now is actually an example that took place on the 6th. So if we just write this out for you guys, example is on the 6th of November 2015. We're looking at the non-farm payrolls report, pretty much the biggest economic figure around the world, and it's been that way for many years. Obviously, inflation has become a very big figure as well, but non-farm payrolls really does bring a lot of volatility to the markets, and so I'm going to try and go through um, a bit of a process and how we look through it, you know, given that I've given you guys a decent template to look at so far. So what we're going to look at first and foremost, we talked about the various aspects we want to take a look at. The first and foremost thing is we want to look at the historical performance of the figure. We want to see if there's a trend in the data, look at the typical ranges, and from this we can actually ascertain what numbers we're going to be looking to trade, if any. So what I've done is actually put together just a small Excel sheet. So we could take a look here. The recent non-farm payrolls performance, as you can see, that is basically dating back to June 2015, just a few months, just to see what the market, what this figure actually has been doing over the last few times. And what we can see in here is basically the blue is the Reuters poll. So as you can see, all these blue histograms are the Reuters poll, and then red is the actual figure that came out. So overall, you can see the range of the Reuters polls between about 230,000 to about 180,000. Obviously, 180,000 is what we're expecting for this one. Overall, we're in about these ranges: 223, 220, 203, and obviously it's the lowest one here. But obviously these expectations have slowly been coming off as the actual figures have been slowly decelerating. So this figure from June was 245,000. We had a figure in July at 223 that came in perfectly in line. In August, 153, and then in September, 145. So if you can see very clearly here where we actually do have a trend in the data to the downside. So as you can see, the market has been pricing that expectation in and showing us that most of the analysts are expecting something below 200,000 for the first time in a very long time. That makes it very interesting for us. This builds a very interesting scenario for us because obviously we have the Fed in the background looking to potentially hike rates, and they want to see figures at above 200k. And since we have this downtrend in the data, if we do see a data point that breaks or buckles this trend, and we see that higher than expected number, a much higher than expected number, well then we could see some very aggressive positioning in the markets. So that's one aspect that we're looking at. So as we said, we've got a downtrend in data, and then we want to now figure out, okay, so what's our highest and lowest figure of the last year. So I've actually written that down off of my Reuters, and our high print over the last year or so has been 423k. That is our high print. And our low print is 119k. So this is just just in case we get a print that is much higher than expected, something that's astronomical, something that's above and beyond the ranges that we've been seeing in recent history. The market's probably going to overreact to that kind of print. And likewise, for a print that's below, let's say 120, 119,000, well, we should also get a pretty big reaction because it's a lot less than what we've seen in recent history. So that's just the beginning of the foundation, the beginning of the backdrop of preparing for this figure. Now we want to look at the importance of the news and the effect on the market. Now obviously we've already said this is a very important figure. It shows the employment, the growth in employment in the United States, which is still the biggest economy in the world. So having said that, we're not exactly going to go through if the volume has been growing um, or somewhat moving lower in recent times, just because we know that we get loads of volume on this. It's more for other figures that you can see we're steadily getting more and more volume, and we should be paying attention to. This figure notoriously does have a lot of volume. Now, if we just take a look at what is our average move on the figure. Now, one of the markets that I'm going to be trading, and I've got some stats, some small stats on the Bund. If we want to take a look at the average tick move on the figure, and I've got this little chart here that I've got from um, this guy that I follow on Twitter that looks at the Bund, trades the Bund. He's at a F69, and he's come up with this small little chart on the day, just showing the frequency of how big of a range you get after the non-farm payroll. So you can see really a range of 20 ticks, let's say, after the figures come out, has a frequency of 3 times. Then it's basically in increments of 5. At 25 we've got 4 times, 30 no times, 35 we've got 12 times. That is our mode. So more often than not we're getting a 35 tick move after the figure. And then we get 40 tick 5 times, and likewise for the rest of these. You've got a couple of outliers at 65 and 70 ticks. These are probably moves when you see very, very high prints or very, very low prints. Now, this gives us just a bit of a picture on what we should expect on the figure. If we do see a blip on the figure, are we looking for, a blip between 60 and 70 ticks? Well, not really, because it seems like a bit of an outlier. We're looking more for moves between 30 and 40 ticks, really. That's really our value area, as you can see in here. So this is really what, the crux of what we're looking for on a move in the Bund after the non-farm payrolls. Now, the next thing we want to look at, and probably a very important part, is how does each asset class react to this figure? And obviously, this changes. This changes with how the central bank's rhetoric also changes. It evolves with how the central banks talk about monetary policy. But in recent times, and to give you the context behind this figure in particular, so if we look at various asset classes, so we would expect, for example, on a beat, and then anything on a miss would just be the opposite, but we'll go through the beat. So for example, if we get a beat, we should be expecting some dollar strength. We should also be expecting core bonds to sell off, or weakness in the bonds. Now, there is a bit of a caveat to that. What we would be looking at in the bond space is the euro-dollar stirs, the short-term interest rates. So just to see how the shorter-term interest rate, the shorter part of the curve, is moving. My caveat is obviously when you get these sort of interest rate moves, there is still concern on inflation. There is still a little bit of concern on growth, mostly on the inflation camp. And what you're seeing is on the longer end of the curve, when we are seeing rate hike expectations, so basically as we're getting higher numbers, there's more rate hike expectations out of the Fed. What you're seeing is a flattener type environment. So basically people are selling their shorter end bonds more than they're selling their longer end bonds. And you might get the vice versa if there's a big miss. So we're getting these flatteners. We're seeing an outperformance on the longer end of the curve because of the fact that there is some sort of inflation. Well, the market has a lower expectation for inflation in the future, and that's getting priced in on the longer end of the curve. So if there is a beat, we should expect, like we just said, flatteners in the bond space. So for example, if we're looking at the US 2 years, 5 years, 10 years, 30 years, we'd expect the 2-year to actually sell off more in basis point terms. You can't really judge it on a tick-by-tick basis. You've got to normalize them and kind of homogenize them to see that difference. On a basis point basis, your shorter end of the curve, the 2-year part, should be weaker than, let's say, your 30-year, all the way out on the back end of the curve. So that's one aspect that we're going to be taking a look at, and we're going to be trying to pay attention to throughout the figure. Now, when it comes to equities, this is a little bit of a hard one. U.S. equities, usually what we see on a beat. So we've got to split this up because we're seeing dollar movements, and strong dollar movements also mean euro movements. So on basically, when you have a big beat, the U.S. equities are tending to go up and then down. So that is usually what we're seeing in. Um, so if this is our starting point here, this is our starting price. We're seeing an up movement and then a down movement. Now, what we're seeing out of the European equities, because we're seeing the dollar strength, that means we're getting a lot of euro weakness, and because of that carry trade, which I'm not going to go through too much in detail right now, as the euro USD weakens, the European equities actually strengthen. It's a correlation we've been seeing over the past year or so as the ECB's embarked on a massive quantitative easing program. So what we're seeing is if this is our start point, what we're actually getting is a move up, and maybe as the US equities come down is a bit of a pullback, and then the market continues on its trend higher. That's an expectation that I'm going to have. Obviously, if the market doesn't react that way, I'm not really looking to trade it. In any case, I really wouldn't be looking to trade the equities anyway because it's usually quite a gray area. So in that respect, that's something to keep an eye on. And then finally, the last little bit, commods. So in the commodity space, um, overall, I'd say if I just had to group them together, I'm not going to be looking to trade them, but as we get the dollar strength, what we're usually seeing is that the commodities actually come off as the dollar strengthens. Now, there is a bit of a caveat to that. If we do get excessive equity strength and there's a risk-on effect, what you're seeing actually is oil can rally and be quite buoyant. So there is a bit of a play on that. You have to understand these correlations a little bit, but overall, I'd say we're getting it down because of the USD strength. And now, if we take this whole bit here, it's basically the inverse. Any misses are any big misses versus the beats are going to be pretty much the inverse of what we're seeing there. So now let's just see if we get have a little bit of space here because we want to do basically the one of the final bits before we go through the scenario bashing and actually going through how we're going to trade this. It's probably quite important that we look at the market structures so we understand the market structures going into the figure. So what I've done is I've put a couple of charts together. What we're going to look at first and foremost is a market that I won't be trading, but I just want to show you for the sake of argument what a market with relatively poor structure looks like coming into a figure, because it's something to keep an eye on. So this is basically a 240-minute chart of the Euro Stoxx 50. As you can very well see, let me just get a pen out for you guys so I can just draw over this chart. You can see we were pretty much in this range. I'll just clobber that down. Hopefully you guys can see that very well. We did have this precipitous move to the downside down to these 2950s. We came back, we ranged in this area in here. This is our little range in here. We came outside of the range, came back inside, held it, range in this box in here. So this is a very big and important value area that we've traded higher, broken out, and now we're just, you couldn't really say this is a brilliant looking flag. I mean, it's kind of broken, came back inside, and it's not really looking like a structure I'd like to, push my size on. So as you can see, if we just zoom in on the structure in here, it's a bit of a flimsy looking flag. I mean, you could have drawn it before like this, which we've broken, but we've come back inside. We traded outside, come back inside over here. So really, we're kind of finding value in this area, just rotating from side to side in this little area here. And we talked about this in one of the previous modules about auctioning process and finding value in a certain area. But really, if there was one area I wanted to look at to potentially take part in, would be around these 3288s or 85s. If we just look back, you'll see it's a very important zone on a weekly. You can see it's numerous times we've come in here, found resistance, false broke, came in, found resistance, 3286, again found resistance. So that's a previous resistance now turned support or at least I would expect that. So really, in the equity markets, nothing really to get crazy about, nothing that excites me. And hopefully, for those of you that are technical chartists, can agree with me on that. Now, if we look over to the next structure, we're going to look at the Euro USD. Now, interesting structure. Obviously, the euro has been selling off after Draghi's been relatively dovish. We've seen the move coming into this area. If we look, this is a daily chart of the euro. If we really scrunch this up a little bit more, you could take a look at what the euro has done. It's been selling off very, very aggressively. This is pretty much the range. So if I had to draw around this, you can see this is pretty much the range we've been in all of the year. In here, actually, we sold off a little bit at the beginning of the year, but we've been in this range for pretty much the whole of the year. And some of the key levels that you can just point out very clearly on this chart is, first and foremost, is this level in here. If we just point that out at 111, 111.03, or pretty much this whole range you could see in here. This has just been a very, very key pivot over here. And then moving across, you can see that how that's kind of played out in that little region. Now, to the downside, with the really key level for me, the way I'm really looking to potentially take part in, we'll just try and get this a little bit bigger. Squeezing this a little bit, I know, but hopefully we can ascertain here. You can see at these 108.52s, then again at 108.44s, this level looks like such a really key support level that's held the market in here. We've rallied off this area in here, we've rallied off in here, again rallied off in here. So this whole area below here is likely to be a very nice little stop zone. So again, we've talked about this in the breakout of momentum module. You have to understand where the market's offering you good levels, where there's potential stops. Now, we're sitting above a pretty key little area in the euro. If you can see, this is the daily structure. It would have been amazing if we had an inside day, but we just took that out by a very, very little bit. If we just zoom in on this just a little bit more, you can see we've just taken that out only by a touch. But really, that level at 108.45, 44 or so is really the key area. We take that out. I'm going to try and include that in my plan, and we'll hopefully go through that in the scenario bashing. Now, that is the structure in the euro. One thing I want to note is I do not trade currencies anywhere near as much as I trade the bond space. So that's one thing that I'm factoring into my plan. Even though the structure does look very good, I do understand the price action in the bond space a lot more. So now if we just move on to the Bund, we'll see what the structure looks like in here. This is again a 240-minute chart. As you can see, the market has been in this range for a long time. Again, we've got some really decent structure in the Bund. And I like these kind of structures because you can lean on these price bases where the market's moved into it, ranged inside it, then paid attention to it as we broke out. When we got back in, again, we paid attention to this area around these 157.12s or so, this whole pivot area. We've got a pivot. And now to the downside, the really interesting area where I really want to look to take part if we get a really big beat is these 154.74s and 155.71s. Really this area, well and truly, and if you guys remember, I actually did an absorption video around these areas. There was a really big absorption buyer around these areas. So this whole area, we've seen some really big absorption. Oops, wrong, spelled that wrong. Really big absorption. What does that mean? That means that there was a very big buyer there, and very likely below this area, this key little double bottom area, there's probably a very big, again, a nice little stop zone. And that's something I'm going to be paying attention to, because if we get through that level and we trade quite aggressively, people may be forced to liquidate their long positions quite aggressively. Now, let's take a quick look at how that looks a little bit close up. So this is what we've been doing so far. We've had a bit of a sell-off coming into this area. We know just from our price action from memory that between 83s and 71s is the area we want to be looking at on the Bund. We're currently sort of downtrending in here. It's showing us that we've got some weak price action after we've taken out these 157.12s, or these 157.07s really is the pivot we've been holding. So as it stands, this market is telling me that it wants to test 155.71s. So I've got a very mild bearish bias already coming in to this figure. Now, what's good about this, because we've seen quite a downtrend in the data, and I know that if we get a much bigger figure than expected combined with that slightly bearish outlook in the market and the stop zone, I think there's a good setup to be had here. So potentially, if we get that big number, we might see a very quick move through here, or we might, come through here, pause, come back up, and then potentially break it. Whatever the scenario is, I'm looking for a trade through these 71s, and if we can hold, if we get back below and hold below these 71s, then potentially we're looking at a trend to the downside. So this is what I'm looking for on the short side, obviously, and to the long side. If we do get a move or a miss, it depends how big the miss is, but if it's relatively big miss and we move up, I'm looking to get short around these 157.07s for a move back down again. So you can see overall my plan is holding that structure, that kind of framework in altogether. So let's take a quick look now. What I'm going to do now is actually expand this little frame to the right, so hopefully I have a little bit more space to get my scenario bashing going. So what we'll do is actually change the color of this. I'll just change that to a nice little yellow. Actually, just create a little zone for us. And what we're going to do now is create a little chart for us to build a plan, a trading plan. These lines aren't perfect, but hopefully we get this done. We've got here, and then we've got something that looks like this. Okay, beautiful. I mean, not beautiful, but it'll have to do. So we've got, this is our, oops, let's just change the color of that. So we've got a market here. We're going to be looking at the Bund and the Euro USD. Then we've got the scenarios. Now we're expecting, our expectations are for a 180k figure. Now we're going to be trying to do this around that figure. The first scenario we're going to look at is an NFP that is greater than 200k. Then we're going to have the next scenario, an NFP between 160k and less than 200k. And then we're going to look at an NFP that is less than 160k. So we've got basically our scenarios here are greater, are inline, and are less than. Perfect. Let's try and fill this bad boy in. So for our scenario, now I'm doing a 20k either side because really the 200k mark has been quite important overall in the Fed's policy. It's not a particular standard deviation or anything like that. I usually do look at that, but since we're so close to it in the vicinity, I think the market usually emotionally pays attention to the 200 mark, so I'll do 20k on either side. So in the Bund, if we get a figure that's larger than 200k, what I'm looking to do is sell first pullback, and I'm going to look for shorts below 83s to 71 zone. We just spoke about that zone. I think I just made that pretty clear what my trade plan is there. If it comes in higher than expected and above 200k, I'm looking to sell the first pullback if I get one. Try and get involved maybe a little bit passively until the price action starts coming into in my favor, and then I'll probably look to add if the seller starts stepping in. So I'm already kind of picturing in my head what kind of price action I'm looking for. If I see that price action, I'm going to react. If I don't have to react. I can sit back and just wait until I get what I'm looking for. I need to see the evidence that I'm looking for before I can take part. If you're not seeing the evidence, then you're basically just gambling. Now, if we look at a scenario between 160 and 200K. Now, it's a little bit more complicated now, but if we're above the mark, 100, the 180 mark, then I'm looking for any false breaks lower. In any case, if we get any false breaks below, let's say 83 to 71 area, and we pop back inside, I'm looking to buy on reentry. So I'm looking to buy false breakouts of 71 zone. We'll probably hit the stop zone and then come back inside. That's a scenario. If it doesn't work, then I'm not looking for any trades, and I'll have to change my plan accordingly. If we get a below expected number, then I'm probably looking to fade with a little bit more confidence. I've already looked at the structure. It looks bearish. So I'm looking to sell/fade a lower number. And I'm looking to scale into about 3 clips. Scale in though. That's not just hit in with 3 clips. I'm going to be quite passive, probably maybe get in with 1 clip as it comes up, average into a second clip, and then average into a third clip where I see the price action, where I see fit. I'm not looking to be aggressive on this kind of setup. I've got to give it a little bit more room to breathe, maybe cut my size a little bit because it's going to be quite a volatile event. I don't want to be getting too aggressive. Now, on a figure of a non-farm pair was less than 160K, so in that case, I'm probably not going to fade. I'm probably not going to look to trade the figure. I'm probably going to only look to trade and fade the 157 zone. We looked at that. That was a pretty key little pivot on the chart. You can look back in this video to see what I was just talking about. Now, when it comes to the Euro USD, let's see what we're going to try and do in that market. So, since I'm paying attention quite closely to the Bund, I'm not going to be as aggressive in the Euro USD. So what I'm going to say is, if we get a greater than 200K, even though there's some decent structure, I told you I'm a lot more akin to the price action in the Bund. So I'm going to say do not trade announcement. I'm not going to trade the announcement. And what I'm going to do is wait for pullback to 1.0844 area. So if we break this area, that area I just spoke about, if we break it, I'm going to wait for that pullback and try and take part in there. I'm not trading directly after the announcement. I'll probably wait for a bit of a technical structure to take place, see that it's looking relatively heavy, and then take part. Now, if we get a figure between 160 and 200, if above, I'm going to probably look to hit and basically look for that break of that 108.44 instead of, because I'm probably expecting we won't just snap through it straight away if it's in that zone. It's not a very big one, but even though we've got that level, traders are probably going to look to take out some stops. So I'm looking to trade breakout of 108.44 zone if above, and obviously if we get a lower one, I'm probably no trade. I'm not going to look to trade it at all. Just no point. I'll probably just focus on the Bund. If we get a figure that's lower than 160, in this case, just no trade. I'm not going to trade it. I don't like the structure in that case scenario. And what I'm going to try and do is actually just focus more on the Bund. So this, our final bit in here that we just went through, is probably the most important thing. We do all the prep so we can get to something that's concise, that we can understand, that we can trade off of, and when it finally comes to that time we're making a decision, we're not making too many decisions in the trenches. You're always going to have to make decisions in the trenches. You're always going to have to think on the spot, but our job here is to actually reduce those decisions while the event is taking place and have a steady flow or process that we can follow so we can stay calm, have clarity throughout all the madness. So this has just been basically the structure of how we can prepare for a figure like the non-farm payrolls. In the next video, I'm going to trade through it, and hopefully one of our scenarios will come to fruition and we can execute as best as possible. So thanks very much for listening. Stay tuned for the next video, guys. Bye-bye.